All right, everybody, welcome. Welcome back to another Cryptopolitan live stream. I have to say, this feels very, very different from the kind of conversations we've been having over the past few weeks. For the first time in a while, albeit Bitcoin is down today, it genuinely feels like there has been a momentum shift in the market, across the market. And I think what makes this even more interesting, honestly, also something unusual, is the backdrop against which this entire move is actually happening. We are certainly not in a clean macro environment. We are not in a risk on environment at all. We are in the middle of an active geopolitical conflict in the Middle East. The Iran situation has been developing since February 28th. And typically, when you see something like this unfold, markets don't behave the way they are right now. You would expect risk assets to actually pull back. You would expect capital to rotate into traditional safe havens like gold, but that's not what's happening. Instead, what we're seeing is actually Bitcoin doing the complete opposite of what people expected. And it's not just Bitcoin itself, it's the entire crypto market. Now, just to put things into perspective, since the start of the conflict, Bitcoin is actually up. If we go ahead and measure it, right, from the 28th to now, up over 8%. Okay. Now that's massive, uh, just given the context, right? And it's not just Bitcoin alone. Let's take the total cryptocurrency market cap and let's measure this move from here. Now, as you can see, there's over $170 billion that has flown into the crypto market, right? Now, this alone is remarkable. But if you actually compare how crypto has been performing against traditional assets or traditional safe havens, that's where things become really, really interesting. Um, let's take the S&P 500, for example, right? Let's go to the SPX and let's measure the move again. Let's go back to when the war actually escalated to now, and you'll see that the S&P 500 is down 3%. Let's look at gold. Gold has had a shocking move, right? If we look at gold here, since the start of the conflict, gold is down more than 8%, right? So what we're seeing essentially is that Bitcoin has outperformed almost all of the major global indices. We can even look at global indices like, let's take South Korea, right? So the KOSPI, we go there, that's down as well. Now you can take Japan, take Nikkei, down as well. Let's just measure this move and see exactly where and how far it's come down. Down 6%, right? So what does this tell you? All in all, it's not normal behavior. And that's exactly why this conversation becomes so very important. Uh, when markets start behaving differently, you have to actually step back. You need to step back and ask, is this temporary? Are we actually looking at a shift in market structure? Uh, is Bitcoin starting to decouple from traditional risk assets? Or is this just a short-term diversion that eventually, snaps back? Now, I'll be honest, this is probably the first genuinely mega bullish update that I've been able to bring to you guys in months. And I don't say that lightly. Even though Bitcoin is correcting today, there is a complete sentiment shift that is happening beneath the surface. And that's the key part here. It's not just the price, right? It's what's driving this change. Something has changed. Uh, and it's not just Bitcoin that's going up. right? Now, if you look at the Bitcoin spot ETF flows, for example, something has changed there. Like the momentum has absolutely uh, flipped, right? In fact, if you see over the past week, there have only been consistent inflows. And in fact, if we go to the monthly chart, since the start of this month, we've seen over 1.7 billion in net inflows. Now, that's a big shift from what we saw earlier on in February, January, all the way back to November, right? So that's a huge, huge shift. Now, that is only one part of the story. And I think what's more important and what we will be discussing is, apart from the institutional flows, why is this actually happening? Why is Bitcoin outperforming these other asset classes? And I think we will get there, but I also want to say that there is a huge event that's going to be taking place in about 25 minutes or so. And we'll be here, we'll have a sort of live reaction to that event. Basically, the FOMC and their interest rate decision is going to be dropping. So we're going to be checking out what the chart is basically going to do. It's going to be a pretty volatile couple of minutes from now. But we will check in when that actually comes out live. Uh, so yeah, what we're going to be doing in today's stream, we're going to break this down properly. We're going to talk about why Bitcoin is behaving the way it has been in the middle of a geopolitical conflict. We're going to look at whether this actually signals a sort of decoupling from you know traditional markets, and we're also going to map out the key levels that would confirm a real shift in market structure. But before we get into all of that, just remember that the macroeconomic backdrop is going to be equally important. And in fact, I would say that the interest rate decision in itself has already been priced in. If you go ahead and look at the CME Watch, the Fed Watch tool, 98, more than 98%, the probability of a rate um, being maintained is basically priced in. What I think is more important though is the dot plot and basically the Fed's forward guidance on future interest rates. That is something key. That's something that we will be watching when it comes out as well. Also, guys, if any of you are holding hyperliquid right now, that's why I am glancing at the screen. Hyperliquid is on an absolute tear. So W's if you're holding hyperliquid. Okay. Okay, back to the stream now. Back to the reason. What are the reasons? Why is Bitcoin doing what it is? Right? Uh, let's get into that right away. Reason number one, Bitcoin is being repriced as a non-sovereign store of value. Now, this is a huge, huge one. It's a huge point. And honestly, this has been a narrative that has been building for years, but we may be seeing it finally get validated in real time during this conflict. Now, the core idea is actually pretty simple. Bitcoin, as you know, has no government, no central bank. Uh, it's not tied to a single jurisdiction, and it can't be sanctioned. Now, in the middle of a war, a real sort of military conflict that's happening, that property suddenly becomes very, very valuable and attractive to money that is trying to find somewhere safe to go, right? So we've seen analysts describe this as a digital escape hatch, basically for capital fleeing this sort of geopolitical chaos. Now, that in itself is a powerful framing, and it's starting to show up in the data in a very strong way that's hard to ignore. Now, number two, I've already discussed this, but it's the institutional money rotating into Bitcoin. We've seen that in the spot ETFs, but I actually think there's something more to talk about here. let me just bring out that. Yeah, there you go. This is the one. So what we've been seeing here, and this is actually from a JP Morgan study, they published a research showing that GLD, basically the world's largest gold ETF, shed approximately 2.7% of its assets under management in outflows since this conflict began. All in all, this has been happening on one side, but on the other side, BlackRock's IBIT recorded inflows of roughly 1.5% over the same time frame. So think about that. The traditional safe haven is losing assets while Bitcoin's ETF is gaining them simultaneously during an active conflict. So that is a rotation trade and it is happening at the institutional level. And finally, reason number three, and I think this is probably the most fascinating one. Bitcoin actually may have become a sort of 24/7 leading indicator of how the overall market responds to these geopolitical shocks. Uh, I think this conflict is the perfect example of what's been happening. As you know, Bitcoin's price moved before any other asset class when the war first started. It broke out on a Saturday, and none of the traditional markets were opened. Right, everything else appeared to follow its price action. But that is a very different role from what Bitcoin was playing 2 or 3 years ago. So basically, when you put it all together, the non-sovereign narrative, the institutional rotation, the leading indicator behavior, you start to understand why this rally has a different feel to it. Uh, it isn't simply a momentum trade. Of course, there have been positions, derivative positions, which helped the rally, but there are actually structural reasons behind this move. And that's what makes it worth paying close attention to. Now, I'm going to quickly just go over the charts. I have a close eye on the time because I don't want to miss the the decision drop. I'll have it all here for you guys. But we do have some time now, so let's just do a little bit of charting. Uh, all of that fundamental context is super important, but at the end of the day, price is the ultimate truth teller. So let's actually look at the chart because what's happening technically right now is just as interesting as the macro story we just unpacked. And I want to start with the 72K level. So let me just go to a smaller time frame. And yeah, let's go there. Okay, so I want to start with the 72K level because this area has been an absolute battleground. Okay, uh, this wasn't a sort of easy barrier to go past, and now, of course, we are below that level. Uh, but prior to this, Bitcoin actually made two failed attempts at holding this zone before it actually broke out and reached a high of around uh, 76K, right? So if you go back all the way to here, this bit here, this bit here, and we finally broke out, but we're back down now. We'll have to see whether we close above this today or not, right? But there were two failed attempts there. And third attempt, we did make that sort of bump up. And it's actually really important that it took 3 attempts because that tells you there was genuine resistance there. And this wasn't just a number on the chart. Uh, but I think here's where it gets really interesting. And 74.5K level, that's the one that I'm paying real close attention to. This one actually goes all the way back to Trump's Liberation Day lows, right? So if we go back to the daily time frame, you can see that the 75K level aligns perfectly from the lows we saw in April 2025. The entire Trump tariff narrative that dropped and shook the markets found a low there, and that has acted as a sort of resistance now. Uh, and we haven't been able to reclaim that on a daily time frame. So that is the sort of level that I am looking at very, very closely, at least now for the short term. Um, yeah, I think a lot of people bought there, a lot of people defended that level, and now that we're approaching it from below, it just becomes a critical line in the sand. Now, here's something else worth keeping in mind when you're thinking about price action in this range. The 70s have historically been a zone that moves extremely fast. So if you look at this area here back in like 2024, November, accelerated, right? Again, over here, accelerated upwards, downwards as well, accelerated over here, and accelerated over here, right? So what are we seeing there? It basically tells us a couple of things. Uh, there isn't a lot of price history here, and that's pretty straightforward. There's not a lot of consolidation, not a lot of time spent building structure in those ranges. And when you don't have strong price levels to bounce off of, moves tend to be sharp and a lot more aggressive in both directions. So the probability of this move accelerating is definitely there. Now, the asymmetric opportunity that's sitting right in front of us is a reclaim of the 80K level. If Bitcoin can get back above 80K and start building price action in the 80s, that is when you can genuinely start talking about a full sort of structural reversal. But, and I want to be very, very clear here, the flip side of that is also true. If we fall in the 70s, if we can't build on this momentum and we roll back over, that is a bad outcome. That would likely set up the scenario of us probably revisiting firstly the 76K level, and ultimately it would be the 60K level where the local lows sit right now. So those are the levels that I'm looking at right now. You have two very clear scenarios in front of you. Reclaim the 80s and this becomes a reversal story. Fail in the 70s and the bears regain control pretty fast. All right. So now we have to talk about the Fed, okay? Because this is probably the most important meeting in a long time, and it's going to be dropping soon. Everything we've discussed, the Bitcoin outperformance, the institutional flows, uh, the chart setup, all of it actually exists within a macro context, right? Uh, and the macro context is about to get updated in a very short time, right? Uh, so let me just go over this a little. The dot plot that's dropping right now is going to be absolutely critical, okay? Um, and I'll also explain why. This is the first meeting where the Fed must incorporate the entire economic impact of the Iran conflict, right? Oil prices skyrocketing, all of that needs to be factored in. That's a completely different set of data or inputs compared to what the Fed was working with back in December when the last dot plot was actually published. That's important because the dot plot is the Fed's way of telling you how they see the next 12 months playing out. So let's just set the baseline. Prior to the start of the war, financial markets were anticipating at least one rate cut this year. So the question is, does this maintain, or are we actually going to see a shift? Now, here's why the entire Iran war matters so specifically to the decision. Crude oil. Now, if we look at crude oil, I think it's probably up today as well. So if we just go ahead and look at Brent, yeah, we're back above 100 now to the 107K region. Um, Crude oil is up. Let's take it from January onwards, is up over 76%. It's pretty remarkable that. Uh, and yeah, all of this needs to be factored in, right? 76% since January. The central bank is not going to want to make a move on short-term rates, either up or down, until they see what's going to happen with oil prices and the resulting impact on inflation expectations. Now we've already seen this, trickling down to consumer inflation. Um, for example, if we go and look at the fuel prices in the US right now, if we go and look at the fuel prices here, you can see that it's up now $3.8, right? It's pretty remarkable. You can see that from a week ago, even, and just look at that gain from a month ago, right? And these are levels that were not there, haven't been seen for a couple of years now, right? So inflation is trickling down to consumers. It's already happening in real time, and the Fed have to sort of battle with this now. Um, so yeah, that's the backdrop, right? That's the huge backdrop that the Fed just has to grapple with, and we will know in about 8 minutes or so what's going to happen. Uh, but yeah, that creates a real problem because it's not just energy inflation the Fed is dealing with. Food prices are expected to jump due to a rise in fertilizer costs, and manufactured goods are seeing downstream price increases as well. So this oil shock isn't staying contained to your gas bill alone. It's actually bleeding into goods and services, and that is exactly the scenario the Fed has been trying to avoid. So just think about it, right? Like hotter core inflation and weaker GDP growth. This has revived the fears about a stagflationary mix of basically slowing growth and persistent price pressures. Now, that word, stagflation, is an absolute nightmare for the Fed because because stagflation, what is it? Is essentially is the scenario where they can't cut to support growth without making inflation worse, and at the same time they can't hike to fight inflation without crashing an already weakening economy. So it's basically just a trap, right? So what's actually priced in for today? Actually, it's the interest rate decision, right? It's already at a 98% probability that they're just going to maintain the rates. So this is pretty much priced in. Now, what isn't actually priced in is the Fed dot plot, future projections, and I think something that's going to be absolutely key is Powell's tone. So the language he uses in the press conference, which happens, I think, about half an hour after uh, the data is actually revealed. Okay. Now, if the dot plot, let's just think of some scenarios here. We have like 5 minutes, but I'm going to just give you these scenarios, right? If the dot plot stays at projections at 1 cut for the year, and Powell sounds cautious but a little flexible, that's actually probably bullish for Bitcoin because markets have already priced this in. So there's no actual shock. However, I hope this doesn't happen. If the dot plot shifts to 0 cuts, meaning the Fed is explicitly telling you rate relief is off the table, and they will have to factor in the oil spike not being transitory, we would likely see a sell-off across risk assets. Simple as that, right? So if we, see this sort of best case scenario, that's going to be ultra bullish, right? Uh, there is still a real risk that the Fed would look at everything that's happening, the oil shock, the inflation data, Strait of Hormuz disruption, and decide to pull that last cut off the table entirely. So that is a real possibility. Now, I just want to quickly go on to news that has broken out today. And that's the reason why we have actually been seeing this decline in BTC, is that there have been escalations, right? There have been escalations across uh, energy infrastructure, and today there have been news of fresh Israeli strikes on a gas field in Iraq, and this is the world's largest natural gas reserve. So I think it's this is just going to add to the uncertainty, and this is going to add a lot more potential for retaliatory attacks within the Strait of Hormuz, right? uh, I think this is something that we need to keep monitoring, because situations like this just can stir up a lot of uncertainty, which is already there, but also within the Strait of Hormuz, which has been disrupted quite severely. And any more escalations like this is just going to probably add more fuel to the fire, quite literally, right? And also, we did get the PPI, which came out higher than expected. So all of this is going to weigh pretty heavily on what the Fed does in about 2 minutes or so. So let's just tune in. Let's just go back and just keep everything out there. See, for example, we've already seen this, right? We've already seen remarks being put out there by Iran. Uh, and remarks like this is going to have a pretty big impact on the market. And we've already seen that today. Uh, so we'll just need to wait and watch now. I think that's the main thing, right? The analysts, the long-term holders, everybody is just in wait and watch mode. Bitcoin, commendable, absolutely commendable for how it has performed so far, but the tailwind risks are there. We cannot write that off. So we got like 1 minute left, folks. So let's go back to the chart. I want to go back to the chart and actually go down to a really short time frame so that we can see the volatility play out in real time. Let's go to a 1 minute chart, and let's see if there's some fireworks on the table, right? Let's see how that goes. Okay, so I think it's out. Let's see firstly. Probably go to Watcher Guru. Yeah, there you go, folks. It's as projected. Let's see what BTC is doing. Oh, there you go. There you go. Okay, let's look at the dot plot now. If there's any news on that. So big wick. Guys, just expect a lot of volatility from here on out. Something remarkable as well. I read a research from FEMX Exchange, which basically says that volatility will persist for the next 48 hours, and this has actually played out in the last 8 FOMC meetings. So potentially, it could be a dip buying opportunity. Not financial advice, but this is what. Okay, I'm trying to find info on. Let me go ahead to the screen and check it out. Right. Okay. So yeah, as expected, it's held steady. And I can see that the Fed officials have penciled in one cut for 2026. So Yahoo Finance seems to show this. Let's go in here. Let's check this out. Yeah, it looks like that has been maintained. Just go back to Twitter and confirm as well, though. Oh, well, what I'm seeing is that they have maintained their projections, which is actually pretty bullish. Which is pretty bullish for Bitcoin. But I just want to make sure as well. I'm going to see a couple more sources. Okay, folks, I think that has been factored in. Regardless, any more updates that we get, it's going to be all on our Twitter. I'm going to be up. I'm definitely going to be up watching Powell speak as well, because that is going to be a clear indication of whether he has a sort of hawkish or dovish tone to what we've seen in the data. That's going to be really that's going to really guide the markets as well. Um, so yes, folks, I think that has come in. Um, So yeah, okay. So here is what I really want you all to watch going forward. Um, Watch oil, not just the price, but the reason behind the price move is it's still elevated because of Hormuz blockage, because of factors like what's happened today, or is it coming down because ships are moving again? Watch for any diplomatic signals out of the region, ceasefire conversations, any indication of de-escalation, and watch Bitcoin's behavior relative to oil. If oil starts coming down and Bitcoin holds or moves higher, that is the decoupling trade fully in effect. If oil spikes further and Bitcoin actually stays resilient, uh, that tells you the safe haven narrative is genuinely gaining traction. I do think we are in a historic moment. The Strait of Hormuz crisis has been described as, one of the largest disruptions to the energy supply. Uh, and Bitcoin, for the first time, is been treated and tested as a safe haven asset in the middle of all of this chaos. So far, it is passing that test relative to what we've been seeing in TradFi. That's all for today, folks. I urge you all to keep an eye on what Fed Chair Jerome Powell has to say in the press conference, which is actually happening in about 25 minutes or so. Uh, that's going to be pivotal. Uh, but until then, and like I said, watch oil. We will be back next week with a full breakdown of how the markets have actually absorbed today's interest rate decision. Uh, and we'll also have an updated read on the straight situation as well. Until then, folks, stay sharp, stay informed as always, and I will see you all in the next one. See you all, folks.